Welcome back to Firmer Ground from SRM, where we explore trends and strategies impacting the current and future state of financial institutions in North America and across the globe. This is Neil Doherty, host of today's podcast and Managing Director of Global Marketing at SRM. In this episode, I speak with Travis Frey, Chief Technology and Security Officer at Dover Federal Credit Union in Dover, Delaware. Mr. Frey has spent more than 20 years in the operational elements of the credit union industry and brings a unique perspective to innovation in IT strategy and execution. We'll discuss a bit about Dover Federal Credit Union's 65th anniversary, where the future will lead his credit union and all credit unions, and the art and science of meeting member expectations. We hope you enjoy this conversation with our friend, Travis Frey. All right. Well, hello, everyone. Neil Doherty here, Managing Director of Global Marketing at SRM, and my guest today in the studio is a longtime friend of our program at SRM, Mr. Travis Frey. And Travis is the Chief Technology and Security Officer at Dover Federal Credit Union in Delaware, and he's an advocate for embracing innovation in the context of financial services. So happy to have you here today, Travis. Thanks for joining me on the Firmer Ground podcast. I'm sure this is going to be one of the more interesting episodes to date. So thank you so much. How are things?
Things are good, man. Things are good. We're rocking and rolling here in Dover.
Right. And I've heard, let's get into it, right? Because I saw, and I wanted to congratulate you and your colleagues at Dover FCU. It's the credit union's 65th anniversary. That's exciting. So tell us a little bit more about the importance of that milestone for your institution, how you guys have been celebrating.
Yeah. So, anytime an institution kind of hits those milestones, it's kind of awesome. And you think about 65 years, it's, 3 generations of members have enjoyed our credit union. And, we recognize that. So, what we've done here as a team is we kind of came together and started really brainstorming. How do we want to celebrate our 65th? What ideas do people have? How do we want to kind of, really embrace the inclusivity? Asking a lot of our team members about what do we want to do. So, a couple months ago, we started really hammering a bunch of ideas together and kind of classified them as stuff we can do, stuff we can't do, right? Like we can't give away a car. I mean, it'd be cool to give away like a 65 Corvette or something, but just can't do those things. But where we did land, which has been kind of fun, is we kind of kicked off our celebration in the middle of June. And what we did for the first time in a while is we actually empowered our branches to, think of a 1950s theme and decorate their branches accordingly. So we have 45 records hanging on our one branch. We have like model cars from the era at another branch. And we really wanted to, from a marketing standpoint, just kind of keep our colors and our tone the same, but give the branches some creative license. And we actually gave them a nice budget. So they're able to provide like cookies and birthday cakes on Fridays, things like that. Really trying to, give our members a reason to come visit us at the branch again, right? During COVID.
Sure.
Like everybody else, everything pivoted to remote. And we kind of saw that in our transaction volume, kind of our branch foot traffic is just kind of, we wanted to use the 65th as a reminder that, hey, we're still here. We still have branches. We're still here in our community. So then the other big idea, we haven't launched this just yet, is we're going to do some random acts of kindness in August, where we're going to create some teams that are going to kind of, canvas the areas, our communities, and, do things like buy the first 100 customers a cup of coffee, fill up $20 worth of gas for people, buy for groceries, things like that. And we've kind of carved out a little bit of our budget to be able to accomplish that and see what we can do with that. Again, it really trying to involve more of our team. So it's not just the marketing team doing it, or it's not the experience teams. It's kind of everybody. Yeah. So, and then the other big thing we did, man, that's kind of going gangbusters, is just like everybody else right now, every FI out there is trying to get those share deposits in. So we've put together some pretty attractive rates on our certificates. We jumped up the rate on our rewards checking account to 4.65% for the first 15,000 on deposit, things like that. Again, just really trying to enhance the financial lives of our members in our community by offering, incredibly good rates and reminding them that we're here,
That's great. And so it sounds like you've got a good combination here of like, just kind of fun and member surprises, as well as, kind of the best in breed in terms of products. So that's awesome. And it sounds like you did some kind of crowdsourcing on that too. Is that accurate to say?
Yeah. So that was one of the big things. Yeah, it was one of the things for us, is we kind of like start looking towards the future for how we want innovation to work here at the credit union. Is, the past 3 years we've gone through a revolution, I guess is probably the best way to put it, in the way we think about problems, the way we try to solve problems. It's not just one department doing it now. It has to be multiple opinions across multiple spectrums, across multiple diversity spectrums, things like that, and try to understand what it is we're trying to build. and seek the input from many. So, I've been fortunate with the team we have here at Dover. They're incredibly outspoken. We do a lot to create a space that's safe for them to share ideas, where we're not, maybe in the distant past, somebody would come up with an idea and it would be shot down or whatever. And now we're trying to do the yes and versus the no here
Sure.
type of conversation. So yeah, I mean, it's been fun. And the anniversary project's been a fun project. And we're looking at doing some more of these, like you said, kind of crowdsourcing. We want to try to experiment a little bit and involve our members and bring some
Mm-hmm.
of our members into the conversations,
Right.
try to get them to, be part of it. Cause now, like you said, everything's remote now. I mean, we do so much remotely now. Like doing a remote focus group shouldn't be that difficult. So these are
Right.
the things that we're kind of starting to play around with a little bit here as we kind of round out 2023.
Yeah, that's interesting. I mean, I think when you talk about the idea of crowdsourcing, there's that combo, right, of the internal version, and that's awesome that, it sounds like everyone organizationally has,
Mhm.
the ability to, provide that input and to be an idea generator, because good ideas come from everywhere, right? But you've
Mhm.
also got that perspective of, potentially bringing it from the outside, which is awesome. And obviously, you need to know what members are thinking, what their expectations
Mhm.
are. And actually, just for the listener's sake, could you remind us, what your branch footprint looks like today?
Yeah. So we have 8 branches. We're in Delaware. We kind of span from. So if you think about Delaware, it's not really a rectangle, but there's 3 counties in Delaware. So big state, I know. But we have a couple branches in our northernmost county, which kind of borders the Philadelphia area. It's Wilmington area, center of the state. We have a couple branches, and then a little bit south in the southern part of the counties we have states. So 8 branches, kind of across Delaware. We started as an Air Force credit union, so our feature branch was at the Air Force Base. We've put up a couple other ones across the state, and our state's unique in that. So the southern state, the southern county in Delaware, Sussex County, in 2021 and 2022 was the fastest growing county on the East Coast. So it was growing faster than like
Wow.
the counties in Florida, right? Because southern Delaware has fantastic beaches, affordable housing, used to anyway. It has, great. It's a great retirement community. We have really great weather here. I mean, despite being in the Northeast, this last year I think we had
Sure.
2 inches of snow. So it's very appealing for those that want to see the Four Seasons, but have to have the headache of plowing.
Right. And some distinct tax benefits too in Delaware.
Yeah, yeah, and we're tax free. Yeah, exactly. We're tax free, so that's the big deal around here.
And I asked that question because just I wanted to give some perspective for the listener, because I think some of the things that you've done in your role and some of the things that your organization has done, while technically being kind of on the smaller side from a branch footprint, are really impressive and start to reach towards the future. And I guess that's a good segue too into thinking about it. And you mentioned trying to kind of change the essence of what happens in a branch, and you're working on that and some plans there. But you've got this 65th anniversary now, and the question always that I think of is what will it take for your credit union, for credit unions in general, to ensure the next 65 years are successful, right? And that the operations and the growth is there, and really just the engagement. So I'm curious, just from your seat, from the role that you play, and I know that you're very much involved in day-to-day operations as well as kind of innovation and technology. I'm curious what you think in terms of kind of what that next 65 looks like to keep it going.
Yeah, that's a really interesting mind game to play, to say what does the credit union space look like in 20,
Right.
what is that, 26, 2088, 2089.
Yeah. Because of course we don't know
I,
what the world looks like then either. So
yeah, and so I think the better way I look at it is, what's it going to take for credit unions to survive? What's it going to take for even small regional banks to survive? I mean,
sure.
there's a lot of external pressures, and daily they grow, and they become stronger and stronger. I mean, not to mention that thing, cybersecurity, that just will not. It's just a continual external pressure. That's not going to go away anytime soon. That's only going to get more and more sophisticated as we move forward. So when I think about that future and how's a credit union going to survive another 65 years, and what does the world look like 65 years from now? There's a lot of questions that come into play there. It gets kind of wild. At what point do people stop driving cars?
Right.
Is that
We
a
were
long
promised
term?
that a long time ago, by the way.
Yeah, we were, what I found interesting with that question is, if you go back to 1958 and you rewind that 65 years, we're now in like 1897. Where credit unions really weren't started yet, and banks were still kind of just starting to come around or whatever. But people were driving horses. That was their main thing.
Sure.
and vehicles didn't come around for another 20 years after that. So if you rewound the clock to 1897 and said, what does 65 years look like? We went through two world wars. We went through an industrial revolution. We changed the way we sprawled out from cities into suburbs now. So we've changed our lives. We've changed how we live. The nuclear family became a thing, like that where the word that comes to mind every single time when I think about this is the word safety, right? So that's where credit unions and just society in general, we have to land in this sense of safety. When you think about, to go back to Psych 101, Psychology 101, Maslow's hierarchy of needs, if you don't have a safe environment to operate, it's really hard to move up that chain that chain to get to self-actualization, to get to that nuclear family, that sense of safety, what have you. So, when you look at the world around us, I look at, so in 65 years now, what are we doing now for Gen Z? For those exennials, whatever you want to call them, the people born after 1990, that some of them have never experienced a time of peace. They don't know what it's like to not be at war with something, or to have the world at war somewhere.
Sure.
So and you see that the reaction of that is they're holding off on major life events, right? They're not getting married, they're not having children, they're not buying homes. And you can say that there's a definitely truth to the component of everything is way too expensive for them to do that, and it's unaffordable. But there's also in my head a real lack of a sense of safety in that generation. So
Sure.
for us to sit here and expect them to be this, the typical quote unquote capitalistic purchasing consumers, I think it's kind of unrealistic.
Mm-hmm.
So I look at that generation as the one that's going to define the next 65 years. And what behaviors are they developing now that'll speak to those 65 years? We're seeing Gen Z consumers shy away from lending. They do a lot of research before they reach out to a credit union, right? And they're getting hit. They're not getting hit by other banks. They're getting hit by Chime, by SoFi, by Apple.
Sure.
They're getting hit by tech companies, and you're starting to see the commoditization of banking, and banking as a service, everything as a service is right, to me, that's right around the corner. And that generation that's going to be the grandparents 65 years from now, what are they teaching their children, and what are they teaching their grandchildren? And that's the stuff that goes through my head is, and I go back to that word safety every single time is, what's it going to take for a credit union to survive the next 65 years? We have to create a sense of safety in our communities. Mm-hmm. We have to get involved. We have to find ways to create financial certainty for our members, find ways to help them improve their credit score. It's the stuff we've always been doing. And that's the good news. If there's a silver lining in any of this, it's the good news is Gen Z wants to align themselves with companies that are vesting into their communities.
Sure.
Well, that's been at our core. Every credit union's core mission statement virtually reads the same, right? And somewhere in there's financial well-being for our community. Well, that's Gen Z.
And that's such a unique take. And I think if I'd asked that question to 9 out of 10 people, they may have just answered, well, it's just, continuing the arms race from a technology standpoint, right? But your answer was something that, even I hadn't thought about as we, kind of were approaching this conversation today, which is the idea of like those external pressures and that element of safety and, peacetime versus challenging times and all those socioeconomic pressures. Like it's such a unique, reality that people maybe don't think about when they're, either too close to something or, thinking about something just more. Because, I mean, the easy answer is, well, we just have to continue to get better at digital transformation and meet expectations, right? But, I think you've shed some light on something that maybe we don't always think about in terms of, the day-to-day operations from a financial services standpoint, which is all those kind of external pressures.
The analogy, I mean, we had a couple of team meetings this week where we talked through some of those challenges from the tech standpoint, because the technology is definitely it's going to help position you. The fintech partners you choose are going to really speak to your mission, and that's the kind of the other piece of this is you have to think about what your mission looks like, what your strategy looks like, and then you have to find the fintech partners that can help maybe remove some of the friction that's in those processes. And the reality is, and the secret sauce that I think a lot of creators have, you can probably already do this yourself. It's just a matter of having the resources to sit down and do it. And can you do it as well as, Venmo, or as well as, PayPal, or insert any other system here. The challenge is the pace at which technology is moving, and you throw, artificial intelligence in there. You're starting to hear more and more about quantum computing, breaking every encryption method ever known. What's the constant through all of that? Well, all of that's doing is creating additional layers of uncertainty of, and Gen Z sees that clear as day because they're not on Facebook anymore, right?
Mm-hmm.
They're on TikTok. They pivot so quickly with technology that if you're saying my strategy is to keep ahead of digital transformation, moving forward with technology, um, you're going to lose people along the way because you're, to me, in my head, the strategy really needs to be a blend between the digital transformation and kind of this community transformation.
Sure.
Because you're still going to, you're not going to get people coming to your branch to do transactions and move money more. People go to your branch because they want to establish new business. They want to solve some problem they can't use technology to do, or maybe they just want to come in and talk about where they're headed, into the future with retirement or what have you, get some education. So,
Sure.
education, problem resolution, and new business line creation to me is what the future of branches look like, and making sure we have resources, staffing, and technology that speaks to those things and get it done right. And the analogy I give is, we can leverage technology to reach out to you and create a really compelling message of why we're awesome. Then we can create a call to action. Click this button and go do this thing, and it's really awesome. And then you get to that front door. And the analogy I just gave somebody yesterday was, it's like we're sending out these invites, telling people to come to this party, and they open up the door and they don't know anybody. They don't know anybody in that room. Are you going through the door, or are you closing the door and waiting for the next party to go check out? So it's getting all of those things aligned correctly. So when that member, gets that message, it's relevant to them, it's meaningful to them. The call to action makes sense, and the next steps are frictionless. That's to me, that's digital. That needs to be table stakes, like tomorrow.
Right.
Then beyond that, you have to educate that person that just joined the credit union as to why the credit union is special. Why is your credit union special? Why is your mission statement meaningful to that person, and creating that connectivity, the connective tissue there. And I don't know that our industry does a great job at that. I think there's definitely room for improvement there. It's an area that we're certainly looking at from a strategic sense of how do we build a platform that can kind of create that connective tissue. And for me, it starts, this is going to sound really corny, but hey man, it starts with leadership. It starts with creating that understanding the why we're doing something, connecting it back to the, not what we're doing or how we're doing. It's the Simon Sinek stuff, right? It's starting with the why and then building your message from that, of what we're about.
So if I could take a step back for a second, because I think this is that kind of understanding the why. One of the things you mentioned before is like to get the future right, it also takes community transformation. And forgive me if this is kind of a curveball, but like, what do you see as the credit union's role in community transformation? Do you have a role?
No, that's a great. Yeah, I believe we do have a role, and I'll tell you. So some of the areas that we are actively focusing on is affordable housing, right? This issue is countrywide, it's nationwide. It's, you go back to that safety thing. Okay. So when we think about safety, I go right to three major pillars of safety to me are like literal safety, like, police force, firemen, those basic levels of safety in our community. Second thing would be healthcare, making sure I have a physician that can take care of my issue, a nurse that's there to help me through that process or whatever it is. And then the third thing is education. So you're talking about police officers, you're talking about firefighters, you're talking about nurses, doctors, and educators. So those to me are the five in my head, and you can argue it wherever you want to argue. Those are the five areas.
Sure,
that
you've covered the bases
struggle
there for sure.
Yeah, there's other little nuances, I'm sure, but those are the five areas that I consider if you're doing those five things well, chances are your city is thriving. But the reality is, when you look at those five verticals, they can't afford housing in the communities that they're trying to establish themselves in. We have a hospital here in Delaware, a beautiful facility. It's a learning hospital. It's in that growing county downstate. It's right behind my house. So it's just a beautiful facility. And, we were actually at a conference with them, with some of their leadership 2 years ago. And they were saying that they had 12 physicians. They were going through the residency at the hospital, and 11 of them were moving out of the area because they couldn't get houses to afford. These are doctors, man. Like, doctors can't afford houses. And then for me, where this hits me personally is my one of my children is an English teacher at the local high school. Uh, and with his salary and the cost of everything, there's no way he has an option to not live with mom and dad.
Mm-hmm.
So, and he's talking to his colleagues at school, and he's finding 30 somethings that are in the same boat of, I still live with my mom and dad in their basement or what have you. And it's they love to teach, they love to reach out to the kids, they create that sense of safety, but we're not doing anything to help those segments of our population find affordable housing, find affordable programs. So, our credit union, we're committed to working through that, diligently working through that with the various 501c3 nonprofits in Delaware, with the various entities in Delaware. I actually lead a consortium of sorts, sort of affordable housing task force out of the Sussex County area, where we have bi-monthly meetings with legislators, with city government, with developers, with builders, with people in these, call them credit marginalized communities, where we're trying to connect the dots. And where does the credit union come in? Man, we're a lender, right?
Sure.
We can find ways to take risks for these communities to get people into these affordable homes. We have, the other community that's in there is the laborers community, right? So, ITIN lending needs to enter that equation. We got to find ways to get more creative with lending, where maybe a multi-family house. So it's a 4-bedroom, 3-bathroom house that's got 3 families living into it with a shared mortgage payment. We have to figure out ways to write notes. We have to figure out ways to write loans that speak to those diversifying, marginalized lifestyles that are kind of not quote unquote normal. Whatever you want to classify that. And when I say normal, it's when I was growing up, it was the American dream, and now like there is no American dream. It's I hope you can afford your car payment
Right.
and your student loan payment and your home and your insurance.
Well, the normal continues to shift, right? And I
Yeah.
think post pandemic, it's truer than ever. It's interesting you brought that up. I'm actually looking forward to. I have a conversation coming up with Mr. Rodney Hood of the NCUA, who's also very much an advocate for affordable housing, and kind of looking at the creativity in that space, and how do we kind of flip the norms, so that affordability becomes a reality again. So I think that's a really great take. I love the fact that obviously you're very engaged in that, and that the credit union is also engaged in just thinking creatively, right? There's some realities in operating that, I'm sure make it hard at times for you to do exactly what you'd love to do, tomorrow or the next day. But at the same time, the fact that you're taking that on, that you're having some ideation around that is really excellent. And I think that will continue to be, hopefully one of the, the differentiators for credit unions as that world kind of moves forward, and the reality of things and costs, continue to, shake us up at times. Right. So I think that's awesome. And I appreciate you sharing that, because, this conversation, I thought we were going to go down one path and talk a lot about technology and innovation. And now we've already talked about community safety and, the role of the credit union in the community. And I think that those are all, very important elements of, how do you think about operations? How do you think about, your impact, your charter, your vision for going forward? So I think that's fantastic. But I do need to bring you back around to technology at some point, because I know you're good at that.
Sure,
right?
man.
So let's get into that for a second. So you mentioned Fintech relationships a little bit earlier, and I just wanted to kind of pick your brain a little bit in terms of, what you think the state of the Fintech working with credit union relationship looks like right now. Maybe what are some of the areas where fintechs are best set up to support credit unions and vice versa? And if you have any just kind of, stories about how you're working with fintechs that you're willing to share, I think that would be great for the listeners as well.
Sure. So yeah, I mean, fintechs they need to be an important part of any credit union strategy. But the reality is there's a lot of shiny nickels out there, and you send a team to a conference and they come back with 15 shiny nickels they want to deploy, and they go back to their core, they go back to their IT team, who's like, no, I just had this discussion at a conference in Chicago. You have IT teams at credit unions that are just there to keep the lights on, and that's what their focus is keep the lights on. And with the never-ending threat of cybersecurity, it seems like that's literally. And then since the pandemic, we went from a 9 to 6 5-day a week department to a 7 by 24 by 365 department, because we have people, vendors, connections. We have activity taking place all the time on our network. There's no, I mean, we have a if we have an update in the past, we'd say, okay, at 7 o'clock, we're going to run this update because no one's online. Well, then we find out there's like 3 teams online at 7 o'clock working on a project because that's the only time they had to do it. And because of the pandemic, now we've given them this awesome tool where they can connect anytime they want. Well, that's great, but that means now I have a team that's like, they're already at their wits end, and now we're going to give them 15 shiny nickels to say, okay, figure out how these kind of get lined up. So one of the things that we've done here at Dover is we've taken a step back, and I like to say we've kind of downshifted the vehicle a little bit, the innovation vehicle a little bit. And instead of going out and finding shiny nickels, let's take a look at the nickels we already have and let's make sure they're optimized. And that'd be my big strategic advice to any credit union that would listen to this is take a look at what you've already made the investment in. Are you getting everything out of it you can? A lot of these fintechs, and fintechs in general, tech companies, the tech partners that you have probably have multiple uses that sit under one roof that your shiny nickel is you already have it. You just don't know you have it. So you have to go back to your vendors and ask them, hey, can you do this thing for me? And what we're finding here is a lot of them are like, oh yeah, we've been doing that for 30 years. Like, let's just flip this switch, turn on this billing, and you got this piece of rocket and rolling. Because the part of the fintech relationship that to me is twofold, is often left not want to say left unchecked, but it's it's a challenge I have because I'm the technology and security guy here at the credit union, and it comes down to vendor management, right? So I have to know about the fintechs, how they're connecting, how they're secure. Are they SOC 2 compliant? Do they understand how the data flows work? Do they have their ducks in a row, or are they just really, really great at making cake? And you don't ever get to see the kitchen they're making the cake in. I need to see the kitchen they're making the cake in. I need to understand how this thing interoperates. I need to understand where the risks are, who's patching it, how is it being patched? Prove it to me. Show me this stuff. So some of these fintechs have never kind of seen NCUA audit and kind of what needs to be put through that, and we're informing them, and that scares me sometimes when I'm saying this is what you need to do, and they're like, well, I guess we'll do it. Well, we're already partnered with you, and you haven't done it yet. Like, let's get this thing going. And the other part of it that becomes a challenge, and we saw it with the Silicon Valley Bank insanity, is not only do I have to worry about who your cloud service provider is and are they safe, do you understand how your system all works? Is it safe? I need to understand where you bank now, and
will you be here tomorrow?
Banking? Are you are you able to make your payments? Right? It's kind of a wild world we live in.
Sure.
So, understanding with those fintechs, and again, our strategy has kind of been we were going hot and heavy after fintechs for a while, trying to solve problems. We've taken a step back. We've said there's a lot out there now. We can reprioritize our strategy. We can figure out how to do the digital transformation while we're doing the community transformation piece, and then align the partners that need to make sense. So I mentioned I-10 lending. It's a great example of, there's a lot of fintechs out there that do I-10 lending, which is double thumbs up awesome. We probably already have all the systems that do it. We just have to develop the procedures. So, does it require another partner? Maybe not. Does it require some innovative thought and maybe some challenging of the way we've, quote unquote, the way we've always done it? Probably, and we can get there. So, we look at our fintech partnerships as they have to make sense, they have to solve a problem, and they have to make sure that problem they're solving speaks to our overall strategy.
Yeah, and I mean, I think you raised so many good points there, but the one that, really resonated with me is the reality that oftentimes, you're at best you're getting 20 to 30% of, the potential of a platform, of a tech that you've bolted onto your systems. When the idea of optimization seems like such a, ideal scenario in terms of like putting that in the strategy, because we see it time again, whether it's working with clients, whether it's even evaluating our own tech stack and looking at what we have available to us as a professional services company. And there are a lot of situations where if we're honest, we can say we're not getting any even 18 to 20% of the optimization out of this. So I think you make a great point in terms of that kind of downshift idea. And it sounds to me like recently I talked to one of my colleagues, Cynthia, who works with Silbright & Associates, and she was talking a lot about this sort of security first mindset. She puts a lot of time and effort and has a lot of expertise in the cybersecurity space. And it sounds to me like you have that kind of dual challenge of thinking about how to maximize your tech stack, but you also have constantly managing the idea of security threats. So I mean, do you look at your business as kind of a security first business in the way that you've built out your platforms, your methods, your processes? I mean, where how do you feel you guys kind of stack up against others in that space?
Yeah, so I mean, I think we do. I think we do I'll say I think we do a really great job here. I think my team we've put a lot of time and effort, understanding and kind of building out security systems, security architecture, things like that. And when we bring in third parties, we introduce risk because now we're connecting their network to our sacred garden, so to
Right.
speak. So one of the things that we've kind of implemented here is, before we sign a contract, I'm looking at your SOC 2 and I'm holding your SOC 2 up against the same standards the NCUA holds me up
Hmm.
against. I recently talked to a really large credit union in California, and they said that they are actually visiting all of their vendor data centers now, and they're finding shocking stuff like vendors that would, be like if you took a picture of their data center and put it out on a forum would be completely ashamed and would lose customers over it.
Mm,
So, that kind of shattered me a little bit as far as, well, I can read the SOC 2, everything looks great, but is your whole data center sitting in a utility closet somewhere with water running above it
right.
that we're one leak away from catastrophe? So there's some of that kind of stuff plays in my head a little bit, but I would say we're generally speaking we've become a very security first focused institution. One of my other goals here at the credit union, again wearing that security hat on, was really creating this culture of paranoia. Right? You look at ransomware attacks, you look at the ingress points on your network, and you talk to anybody in IT who's worth their weight in salt, they're going to tell you they got these amazing solutions that live outside of your network and it's filtering all this traffic and it's doing all these amazing
Right.
things. But if you're not spending time training your staff to not click on stuff, they're literally just letting them in the door, unlocking the vault, and say, "Take whatever money you want. We trust
Well,
you."
right, and also like
So
every 3 days for all those amazing security points, you hear about a new data breach, right? And
yeah,
obviously,
and
you
there are
you
more you
have the
have to.
challenge of protecting member data as well. So
Yeah, and it's more. You got to do more and more patching, more and more awareness, more and more vendor management.
right,
It becomes becomes a challenge, and you factor that. Plus, oh, by the way, we got these 15 shiny nickels we want you to deploy. It's a real challenge from a resource standpoint, from a department standpoint of where do I need to put my where do I need to put my resources today? Where do I put my chips on the table today?
sure,
So we do our best here as an institution to make that happen, but it's always security first. I do not want to put anything at risk that doesn't that we obviously I want to be risk averse as possible. Low to moderate is kind of our it's kind of our risk tolerance.
sure.
Definitely gearing on the lower side than on the moderate side, but like I said, we do loans all day long and they're moderate risk transactions. So I say that jokingly. We underwrite them well and all that stuff, but at the end of the day, you know it's always a factor of, is that member going to pay you or not? At the end of the day, is a factor of, is that employee going to click on that link and do something bad in your network or not? So we do our best to create a culture of paranoia here, I like to say, when it comes to technology. And I think we've done a pretty good job of it.
Yeah. Well, I mean, I think sometimes we call that like a zero trust mentality too, right? Where
Mm-hmm.
it's just the scenario around assume that everything could get messed up, so we got to have all those pieces in place to avoid that, right? But we've talked about a lot of
Yep.
things, right? We've talked about challenges as it relates to kind of socioeconomic pressures, the rising costs of everything, right? Affordable housing. You've talked about.
Dude, we talked about
Yeah,
2068.
I
I
mean,
mean,
we got ahead of
it's the first time I've
ourselves.
talked about 2068. I love it.
We got
So
ahead of ourselves a little bit, but we
yeah.
definitely talked about a lot of these different items. We talked about the pace of change and technology, but are there any other like bigger issues or potential threats that keep the executive team at Dover FCU up at night? Is there something that you guys are really tracking toward as it relates to kind of your midterm and longer term planning, that you think is important for any credit union to be evaluating or thinking about, as it relates to, again, just that kind of future proofing and guaranteeing that you can continue to meet expectations?
Yeah, I mean, I think one of the things that our team here probably is in tune with is, I'll use the word velocity. Sometimes we from a tech standpoint, it wasn't so long ago. I mean, it seems like it was just yesterday. I was able to sit down and put together a pretty cohesive 5-year plan of where we're going to go with tech, or we're going to go with vendor alignment, conversions, et cetera, et cetera. And then as time went on, that became it's really hard to look at 5 years. We're going to scale back to 3 years, right? So 3 years, we can still put together a pretty cohesive IT plan. And then, during COVID and then coming out of COVID, it's like, I can't really build a plan greater than 6 months from now. And that makes it really hard when you think about all the vendor checks and all the vendor due diligence and all the security concerns. That takes a month or two to get through. And by the time I've gotten through it and said, okay, that's a vendor we want to use, they get scooped up by another provider, or they go out of business, or
Right.
some other weird thing happens, right? FTX blows up everybody's trust of blockchain and everybody's trust of digital assets and crypto and stuff. So, you get these really crazy curveballs thrown at you, and that velocity of change, to me, it's a challenge that we've never had to face before as an industry. We've always had the benefit of, we'll just wait and see. We'll just wait and see. Well, the wait and see time period now is way shorter than it used to be. So creating that agility to be able to meet that need. And then, the immediate things that are keeping us up at night is, like everybody else, is deposits, liquidity,
Sure.
keeping the loan machine going, bringing in deposits and attracting that loyalty base. And kind of with that, velocity is one of them. And I would say the other one that keeps me awake at night is relevancy. How are we maintaining relevancy for our members, for those we serve? There's the recent study, something like the average consumer has like 32 different apps on their phone that can move money around.
Right.
With that's the kind of stuff where I think about velocity and I think about relevancy. Do they know that they bank with us, or are we just another app that they pay their loan to?
Right.
Like, do they know what that all means? So,
Well, and
anyway.
and I would imagine the relevancy piece is also kind of, will the next generation be in a relationship with the credit union as well, right? I mean, I
Right.
have to imagine that's on your minds as well.
100%, man. 100%.
Well, I mean, I think, again, we've covered a lot of stuff. We went out a few years, but I just have one last question for you, Travis, because I know you're a proponent of the early rise and grind mentality. So just kind of more on the personal side, and I'm jealous because I'm not a morning person. I don't know how you do it, but what's your current wake up schedule? What passions are you using that time for these days?
Yeah, that's a great question. So, yeah, no, I about 2 years ago, I kind of started a journey of I needed to get healthier. I had some health issues hit, so I went on I went and dieted, and I started losing a lot of weight, and I dropped about 60 pounds over the course of a year or so.
That's awesome.
And yeah, it was pretty cool. And then boosted my metabolism, boosted up all that stuff. So I kind of landed on this concept of mind, body, spirit. I was listening to a Peloton instructor. This is really, really random. I don't own a Peloton, by the way, but I was listening to one of the coaches, and they were it was a commercial, I think, and they were basically, the coach was saying, this next 45 minutes on this bike is just for you. So let everything else melt away. This is your selfish time to just work on you. And I kind of stole that concept and said, okay, I'm gonna change my lifestyle a little bit. And I usually get up around 4:30 in the morning. And from 4:30 to 5:30, I try to walk a 5K or kind of throw in some jogging there every once in a while. I try to do between 150 and 250 jumping jacks. And then every other day I have a lifting routine just to kind of, exercise and feel better and all that kind of stuff. And I usually wrap up around 6:30. So that's kind of the body part of it. The mind part of it, I try to read as much as possible, which is a challenge, but I'll do that on my lunch break here at work, where I'll sit at my desk and pull out a book. I'm reading a fantastic book called Stolen Focus by Johan, I can't think of his last name, where he talks about the psychology of ADHD and what's happening with technology and what's happening with psychology and how they're, collaborating against you, so to speak, to steal your attention and steal your focus. Just fascinating read. And then from a spirit sense, again, like I mentioned before, we spent some time, my wife and I are fortunate enough to spend some time kind of building a bit of an oasis at our house. So it's kind of like a reflection stand or a reflection area. We can kind of chill in our little garden area. We try to decompress throughout the day and have some share time with each other. So mind, body, spirit.
That's great.
And that's my advice to anybody. Find an hour a day where you can just give it to yourself and improve something, whether it's mind, body, or spirit, whatever. And go. For a while there, I was teaching myself AI. I was going out and reading about Chat GPT and building APIs and trying to leverage that. And it kind of I don't want to say I got bored with it, but I got frustrated with it. So I kind of went on to something else. But it's always find something interesting, go exploit it, and spend some time on it. But yeah, man, my rise and grind is 4:30 to 6:30, and high protein, low fat diet, and just rocking and rolling, man. I feel great.
Nice. Well, you've definitely inspired me, and I love the plan. It's always good to have that plan. So I can't thank you enough, Travis, for joining us today on the podcast.
My pleasure, Neil.
I love the fact you were able to share a lot of different experiences, a lot of different perspectives on, obviously how Dover's doing things, but also, how you look at the industry and the opportunity in general. And I really think our listeners are going to enjoy this conversation. And of course, I would encourage anyone who isn't already connected with Travis on LinkedIn to do so, because he's always got some good content out there as well. And just thank you again to our listeners. And Travis, I will talk to you soon. Thanks again.
Thanks so much, Neil.
Right, appreciate it. Thanks for listening to Firmer Ground from SRM. Please stay tuned for our upcoming podcast. And until then, you can visit us at srmcorp.com or on LinkedIn and Twitter.